Hi, this is Joe Rabil with Rabil Stock Research. So anyone who's watched this show in the past knows that I like to take lessons that apply to the current market environment. So what I want to talk about today is wide range bars and narrow range bars, and really the problem with what's taking place in the S&P with this recent breakout. Now, momentum does play a role in this. I am going to talk about that as well. But the first thing we see always comes with price, and we want to watch that and see how it develops. So we're going to go through that. We'll go through the stock requests that came through, and let's go ahead and get going with this lesson. Before we look at the actual chart of the S&P, I want to give you a couple graphics that I think might help it can be a visual aid for us. All right. So what we're looking at are narrow range bars, which mean narrow range in the way I define them, and the way most people would define narrow range would be taking the last, basically comparing this bar, the most recent bar, to the previous 6. And if it's the narrowest range, it has the smallest range between the high and low versus the prior 6, and it's considered narrow range. Wide range would be the opposite if it's the widest of the last 6, 7 bars. Now, a lot of times on wide range, you'll see people use more like a 4-bar look back. And we do see that periodically with the narrow range as well. There's a couple different ways you can do it, but I typically look at 6 to 7 bars going back for both wide range and narrow range. I'm looking for something that's showing something a little bit different, right, than what we've seen. Now, when we look at the position where these bars show up, if you notice what's taking place here, we have this sideways consolidation and we break out, but we break out with a narrow range bar. And let's just assume this is a weekly chart. If we break out with a tiny little bar like this isn't the type of follow through. It's not the type of directional move that we want to see at a breakout. We want to see force. We want to see volume. We want to see upside extension, which would take place in the size of a big bar, not a little bar. All right. Now, it might not happen on this bar, but we need it in the first couple to kind of see some follow through. So just something we want to keep in mind when we switch over to the S&P chart. So what I say is when we have a breakout or a breakdown with a narrow range bar, you need to be aware this is not the type of price action we want to be seeing. And so we have to kind of be on alert for any kind of a reversal pattern or something like that. Now, it is a little bit different if you come down and you get narrow range at support or even at resistance and you get narrow range. That can actually be an opportunity for a sign of a reversal pattern. And this is also a sign of reversal, even if we come back down, even though we've broken through this peak. If we don't follow through and we come back down through the low of this, then you would look at that as a reversal as well. Now, one other point I want to make is this is showing the same breakout, but in a narrow range bar, but notice how it was a gap. When you get a gap like this, what you want to do is fill this in. This should all be considered green, and it would be a very bullish wide range breakout bar. Okay, so don't be too concerned if the size of the breakout bar on a gap is narrow range when you look at the high and low for the day, because you need to include the true range, which would include the close from the prior day, and add that in, and that'll give you a better idea of what this is actually doing. That's a very forceful upside breakout. All right, let's take a quick look at wide range. This is what we're looking for when we get a sideways consolidation pattern. We want to see an explosive move wide range. We want to look and see when we get wide range bars, we want to determine, is it the beginning of a move, like an emerging sign, the start of something, or is it the end of something? And you can see what happens here on the right. We have this big elongated upside move, and then we get a wide range bar. This would be more bearish. It would be more of a look to be a seller on this bar, or maybe the following bar is the way I look at it. And this can happen on a 1-minute chart, or it can happen on a monthly chart. So we want to be on the lookout for that. Right now, we kind of want to focus in on this pattern because it's missing in the S&P breakout. We've had a little breakout that's taken place from the last 2-3 months. I'm going to look at this right now on the S&P chart. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. So the weekly chart of the SPY. So let's just look at the way this is set up. So we have this breakout level. Let me draw that a little better. We've broken out here and look at what, so this was the, let me zero in on this a little bit more. So this actually was the breakout bar, and look at how we left a little bit of a tail on that breakout, okay? And then the following bar, this is a narrow range bar, okay? And then, you know, this one's not much bigger. It's bigger than this, probably about the size of this bar, and not doing a whole lot. And look at what's happening now. We're 3 days into this week, and we're still just kind of walking it out, working sideways. So obviously there's some jobs data coming that people are waiting for. And, you know, we're going to have to see if we get a directional move. And when I say directional move, I'm looking for wide range. I want to see a pretty good sized green bar here. All right, if we're gonna follow through, or if we're gonna fail, we want to see, you know, a decent sized red bar that causes this to re-enter this breakout area. And I would say at this point now, we want to take out the low of these 2 bars and probably just re-enter the highs of these 2 bars. So if we got a red bar coming back down, especially with some expanding volume, then that would be a concern. The other thing that would tell me that this is a little troubling is if the MACD were to cross right back down below the signal line. All right, so these are the kinds of things I'm looking for. I think right now it's a lot of indecision. We need a little bit of follow through or a failure to let us know really what's taking place. Now, I do want to look at the momentum real quick. Notice how green DI is clearly making a lower high, even though price is making a higher high. Now, it's not officially divergence because we haven't really failed yet. I mean, if this were to follow through, let's say the last 2 days of this week, we get a good jobs number or whatever causes this to move up, then we could get confirmation here to take out that prior peak. It is possible. The other thing that I'll say is on the daily chart, we have broken out and tested the support zone, but look at what's taken place. Do you see how this ADX is not able to break out and get going? Also, the ADX is still below 25, even though we've made a full length move on the on this up leg. So again, I'm looking for more confirmation. I want to see a big green bar show up, and that would instantly improve this. I think this would break out instantly if we got a nice green bar to the upside. So we want to be on the lookout for that. It would also help because we have come down, and that caused overrun in the MACD. And then we went up and tested, which is what we'd expect. This is what I teach right out of my course when I see this in MACD. And then we came back and tested, and now we're turning back up. So everything looks okay here, but we get an expansion bar to the upside. That's going to click this back to the upside, and this is going to break this one out. So we want to see that. Now, if you want to see my in-depth discussion on the SPY, which I go through Friday morning on my YouTube channel, I would suggest checking that out. I go through sentiment. I look at the overbought, oversold and the volatility on both the daily and the weekly. And I'll just give you a quick peek of that. I'm looking at the average true range with its moving average. And right now we're in a pretty good condition on the daily chart, but we have higher volatility on the weekly. All right. So what's it's saying is if you want to do more trading oriented type stuff that I think the conditions are okay, I would be a little bit more hesitant about playing something for longer term, at least right at this second. But again, if you want to hear more about these and how I use them, I would check out my YouTube channel. All right, let's switch this back and let's start going through some symbols. So we've got a NASDAQ QQQ, which is still okay, but it's well below the high from July. You see how this is still showing on a relative basis that it's really not keeping up. Now, what I've been saying for the last 3 or 4 weeks is that this is not a bad pattern. This is all taking place above the 18-month line. It's a corrective pattern, but it isn't really doing damage to the trend. So despite the fact that there's weakness here right now, it doesn't necessarily mean that it's going to continue to be weak. So if we saw more deterioration in the price pattern, that would disturb me more about the relative strength that's taking place. So I think we can still be on the lookout to see if there's follow through. The other thing I'll tell you is what I've mentioned the last 2 of the last 4 weeks is the pattern that's developing on the weekly chart of the and the monthly of the high-end leading AI stocks, the semiconductors like NVIDIA and AVGO. I think those look pretty constructive. I think they look more like patterns that are setting up for continuation rather than, a turn down. Now, it's still a little early on those. They might spend a little bit more time consolidating, but I'm just telling you, like, I think that's an upward bias that I think is a positive for the general market. Now, when we can talk about the indexes or the indices, but in terms of environment, if we want to improve the environment, we want this IWM to break out. We want this IWM to show relative improvement. If that takes place, then not only do we have an upward trending market, we have a much better environment for trading, much better environment to go and pick out selected patterns that look attractive and play them with risk, controlling risk and all that. When we have a high volatility environment and the relative strength of the IWM is lagging, then you're much more susceptible to getting stopped out. You can put on a trade that looks really good and you just get stopped out because it's a noisy kind of environment that doesn't have the good underlying conditions of a broad market with a lot of confirmation, in terms of, like, you could look at advanced decline lines and stuff like that. I just like to look at the IWM because I've studied this for a long time. And when this line is rising, the environment is a lot better. So we need this to really bust through 225 and get things going. Okay, let's look at the SLV because I still think this is a pretty attractive pattern. Look at the size of this big base. Now, it's had a bad week, I grant you that, but I do think this is all a part of, still a part of a consolidation pattern after a breakout. I don't think this has reemerged again quite yet. In fact, I would think that I'd be on the lookout for a little bit of a higher low to form and maybe breaking out through the 30 level, I think would be ideal. If you notice, even though this moved back up here, we did not get this ADX going to the upside. So you can kind of consider this more of a consolidation pattern with an underlying condition that I think is pretty strong. I like the volume pattern a lot, and I love the longer term pattern on the monthly. All right, let's look at ARKK. Going through some of these requests, it's just I've got a little bit more requests this week, so I want to make sure I cover all of those. Let's look at this ARK Innovation, which has had a really long, rough period. Look at the decline phase. Look at how people just puked it out, and now it's going through this basing or recovery stage, but it hasn't quite emerged out of this. All right, now, what I will say is I think if we can cross back above the 50 line again, maybe take out these prior 2 peaks, that would be a really good sign. I don't think, since we don't have any momentum here, and we don't have any momentum here, and we don't have any momentum here, at least on the buyers, that what we need is a breakout, okay? But we want this to break out and then probably look to play the first pullback. That's how I think I would handle it. I think if we can get some strength through 50, then look for some kind of a weakness from there. I think it's a little premature to do any signals. One of the things I like to look at to confirm this is, if you notice, we haven't been able to get this RSI 20, the red line, to clearly hold above. So we need enough strength to the upside to get that to hold when the RSI 5 dips. So if we were to somehow get this to dip and this would to hold above, if this would to hold above during a dip, then I guess it would be the first time that would be happening. I don't know that we can do that. If we get this to get oversold, then this is probably going to drop down below. Hopefully that makes sense. But what I'm telling you is that I think we need a little bit more strength to the upside first and then look to play the next pullback. Okay, ANET. All right, so question here is about the momentum divergence that was developing We had a new high here relative to this peak, and this had not made a new high yet. It still hasn't. And the ADX is sort of the same way, right? It's way down here, even though this is broken out. So what I call this is potential divergence. It's not confirmed divergence. And why is that? Well, if this keeps rising, then this line is going to confirm. And then if you look back on the chart, you would never have thought there was any kind of divergence in place. So we need some form of price confirmation to get a divergence to click in my opinion. Now, the other thing I would point out here, and this is straight out of my course, is this reverse divergence pattern. Okay, we want to know that because I know this is showing divergence here as we make a higher high, but when I know I'm operating off of reverse divergence, then I'm willing to give this a little bit more time to see if we get confirmation. Now, one thing I want to point out is that the ADX line can stay down here. What we want to focus in on is the green DI. See how green DI made a peak here, and a peak here. So it is making lower highs. And we have made a new high here, but all we need to do is get this to take out this prior peak over here, and that would confirm this new high, and it would suggest, especially if the red drops off, that we're probably going into a new expansion phase. So we want to be on the lookout for where green makes a higher high and red makes a lower low. In this case, the red didn't really do that right away, but green took out the prior green peak, and that was sort of the start of the next move. So we want to be on the lookout for that after a corrective pattern, and that's what I'm looking for. See if we get confirmation there. So I know that there is divergence in place, potentially. All right, it's not true divergence until we get, like if this were to come down and re-enter this breakout and this hadn't made a new high, then that would bother me a little bit, especially with what DI is doing and the fact that the ADX hasn't even crossed above 25. That would be a lot more concerning to me. But right now we have to give this a chance to follow through and see how it plays out. And if you want to go down to the smaller time frame to get a little bit of an edge on that, you can do it. But if you notice, the ADX is actually confirming on this time frame. Doesn't look that bad when you look at it on the daily chart. Okay, PLAY. Pretty violent drop off of this peak. It came down, it's testing this low. There's a lot of damage done to this chart. I do think there's pretty good support here, but I just don't see any real potential in this right now. Just not a stock that I would have all that much interest in at this point. I think it needs to go through a period of rebuilding. Look at PLAY. Look at the strength of this move. This is the type of pattern I would be very interested in, but it's overbought in the short term. So we're going to need some kind of a pullback here or pause. And that's going to form this trend is actually going to look like it's breaking down, but it's actually setting up as a new buying chance into the weekly chart. All right. So that's what I would be on the lookout for, is a pullback on the weekly that sets up this daily chart will be opposing trend, meaning going down, while this trend is going up, and that'll be the next buying opportunity. Let's look at Wells Fargo. So we've got a potential break of a downtrend line. All right. Now, one of the things that I like to do, I'm glad someone asked about this. There's a couple things that I want to point out about this. Number one, look at the tails that have formed here, okay? These are good signs of underlying support, okay? Just like these tails were signs of, overhead resistance. When we get these drops and by the end of the month we come back like that, I think that's a really good sign. Now, it hurts the ADX, so you have to recognize that. It looks like negative DI strengthening, but it's really not, because we've come all the way back. So know that, know it's how it's calculated. Again, something I talk about in my course. So if we look at what's taking place on the weekly, I wanted to point this out. We do have this trend line in place, but we also have a monster red bar here, all right? And then we have another red bar here. What I would be thinking is, I don't want to take a downtrend line break unless it's above the midpoint. In this case, it will be. If I draw a trend line, we can see that we break this, we're going to be above the midpoint, but I also want to be above the high of this red bar. So you want to keep these things in mind when you're looking at your triggers. Don't just look at the trend line and say, oh, if it breaks the trend line, I want to be in. You got to go back and look at the price action. And we want to make sure we kind of getting through at least the midpoint of these big red bars. And in this case, I'd like to see us take out the high of this bar, because what we've done is formed what O'Neill kind of forms like a double, calls this, or IBD calls this like a double bottom. So if we can come back up through this high, then that's sort of like a new trigger, and it would be above the midpoint of that bar. Not to mention the fact that we've got a zero line reversal and no real strength in the sellers because the ADX is still low. So something to be on the lookout for. I do think that is worth noting. Now, last week I talked about the China stocks, and I said there's two parts to, and there's actually three. All right. There's the up move, and I'm going to do a lesson on this. There's an up move, there's the down move, and then there's the trigger. All right. So what we looked at last week was the strength of the up move. We had that, but look at the way this is pulling in. Ugly kind of price action, pretty big drops, some pretty good volume, and we've created a big outside reversal bar, at least so far this week. Now, the week isn't over. If we can come back and recover a little bit, then this will make me feel a little bit better if we form another tail. You see what I mean? So we want to be on the lookout and see if that plays out. Now, that does not change the fact that something big is developing. What it tells me is whether we need to be in a big hurry to get in this, or we're going to have some time to play, let this pull back a little bit closer to 100. So watch and see how this plays out over the next few days. I would not take this based on what's taking place. I would not take some kind of a higher low or something like that on this time frame. I think what I would be looking for is for the weekly to come down and the RSI 5 to come down below 50 and the RSI 20 to hold above 50, and see if we don't get an RSI signal on the weekly chart. That's what I would be looking for on this, and that would be the setup of the type of pullback I'd want, and also the trigger. All right, the momentum conditions are really strong with the way this is emerging out of here. All right, Carnival Cruise. So look at what's going on. I've mentioned this a while back with this started to consolidate, and now I've been telling my subscribers we want to watch for this breakout through 20. You see how this is forming this little ascending triangle right at the 18-month line on the monthly? Green is above, and the MACD is about to cross above here. So we can buy the breakout pattern in this situation. Why? Because green is above red. We've got enough strength that the buyers kind of stayed in command through this period. So I'm actually considering this a viable breakout candidate based on the way it looks. Now, what I would prefer to do probably is maybe play this. We got through the earnings, so maybe play this off the daily chart. Or what you could do is use weekly risk, but take targets a little bit quicker, because we have a lot of volatility in this environment. I'm just looking to get some targets taken and maybe get to a break even as quickly as possible, just because there's so much volatility right now. Now, another way to look at this is to maybe play this NCLH, similar pattern, but this is more of the small mid cap version of these cruise lines. And I think the pattern looks really attractive. Same kind of concept, low ADX, good overall look to it. Definitely worth evaluating both of those. Thanks for watching today. If you have any stock requests, you can send them to stocktalk@stockcharts.com, or just put it in the comment area below. Also, my YouTube channel is called Invest Like a Pro. Have a great week, and we'll see you next time.